Welcome to Pilots Say What, where we hear what pilots have to say. This is the 30th episode, a special episode where we are going to be sitting down with not a pilot this time, not a student pilot or a CFI. We're talking with Sergio. This way we can kind of talk about a topic that everyone's going to encounter when they're looking into flight training. How can you pay for flight training? Most people are going to end up taking out a loan. And what I want to do with this episode is really deep dive into any conversation or question that we could have around financing. We're going to talk a lot about how much you can borrow. We can talk about whether or not you can borrow, cosigners, credit, maybe even a little bit of the likelihood to be able to pay it back. For whoever watches this, I want them to feel comfortable starting their flight training if money is really the only issue. I want them to see the options that are on their table. And what better guest to have than Sergio, who's been with Sallie Mae he's going to let us know, but I think it's been about 20 years. And I'm really excited to be here in Conroe with you on our 30th episode. Would you mind introducing yourself?
Yeah, absolutely. First, thank you for the invite. This is awesome. Sergio Gonzalez. I am the Director, Assistant Region Head for the West Region for Sallie Mae. And I reside here in Houston. And I guess just give you a little bit of background on myself. So I've been in higher education for about 30 years, coming this April.
Okay.
So 10 of those years, I worked in financial aid in Houston, Texas, where I live. And then 20 years now with Sallie Mae.
When you did higher education, were you always on the financing side or the...
Yeah, the financial aid side.
Okay.
Yeah, that's kind of how I got into higher education, kind of helping students navigate the whole financial aid process. And then I was there 10 years and I was getting an itch of doing something a little bit different, but still within higher education. Opportunity came along with Sallie Mae, and I thought it was a perfect fit for me. Yeah.
You know, was there something that kind of like, because I don't know if you imagined that's what you were going to be doing when you started your profession. I'm wondering what hooked you in sort of at the beginning. Like you said, you liked helping people. I'm not sure if that's what did it for you.
Yeah, no one ever says, when I grow up, I'm going to work in financial aid or higher education. No, it was totally, I was going to be a lawyer. That was the direction that I was going. But I was doing a part-time job at a financial aid office.
Yeah.
And it kind of hooked, right? So I found like helping students and kind of navigating the whole process, because it can be a little complex. So how am I going to pay for college and education and helping families and parents? And that just kind of reeled me in, and I was hooked. So I was like 30 years later.
Yeah, honestly, that's great. I worked at a job before this that allowed me to like help people on the technical side of things.
Yeah.
And I really enjoyed that. And it also had to do with them, what they were going to buy. And I really liked being transparent about things that I didn't feel like I got the luxury of transparency with.
Yeah.
So it's good to hear that you really do like doing that.
There's been an evolution, and this year was a hard one. There were some big changes in financial aid, but we all got through it, so it's all good. Yeah.
Good. Well, I appreciate you for having that energy about it. Okay, so maybe you're 30 years in, you're working with Sallie Mae. Kind of what's your role there, if you don't mind me asking?
Yeah, so I'm the Director, Assistant Region Head for the West Region. So I basically work with schools and universities and students and high school students in college planning, right? How do you get a plan for college? How are you going to pay for college? Financing solutions. I think some people think, well, Sallie Mae, they're a student loan company. That's all they are. But we consider ourselves an education solutions company, right? That helps provide financial literacy along with other resources to help with college access and success. That's kind of our niche there.
I like that.
Yeah.
And I think that's kind of a lot of what we're probably going to be talking about today. I didn't really tell the audience, today we're going to talk a lot about financing and the ability to pay for, something further in your career, whether it be education in one field or another, but especially today with aviation.
Yeah.
It sounds like you work a lot with aviation companies at this point.
I do. Yeah, I really do. Yeah.
Yeah. And that's what I was going to say is you're speaking about it like a solution. And that's kind of what I want to focus on. For me, I mean, I'm about to be turning 30 if I'm going to put my age out there.
Really?
Yeah, I know.
You seem 20, like yeah.
I get that a lot. So I'm like, man, I'm exposing
like a
myself.
baby.
That being said, I remember just being so clueless. I remember thinking that loans were given to people who needed more money, not necessarily people who were maybe fit for it or needed it for a specific reason. I didn't really understand. So I like the idea of highlighting it as a solution.
Yeah.
That being said, we have plenty of questions that we know are frequent questions.
Yeah.
I may want to get into some of those. Can you tell me what kind of loans there might be? Maybe there's like private loans or, I'm not sure how that works exactly.
Yeah. I mean, let's focus in on aviation.
Yeah.
And this is for any aviation school for that matter, right?
Mm-hmm.
So private loans,
Mm-hmm.
because aviations are considered non-degree seeking students, so they're certificate programs.
Okay.
So private loans is probably the majority of the financing that you're going to be needing to pay for aviation school.
Okay.
They're usually credit-based loans
Mm-hmm.
to help them finance their education.
Okay, that sounds good. And then, people probably have super general questions. Can we maybe knock some of those out?
Yeah,
Now I'm pulling some of these up from my own
yeah.
knowledge of
Your own
myself, not knowing,
experience of not knowing it.
right. But and you may know some as well. But like for example, an APR or interest. I mean, that's super basic, but I also would like people to
Yeah.
start off with
No,
that.
absolutely. Yeah, that's a good question. Yeah, because what is the difference?
Yeah.
So the interest rate is basically what the lender's charging you to
Mhm.
use and borrow their money. That's
Right.
an interest rate, right?
Right.
Or an APR, that's the cost that you're going to pay yearly
Mm-hmm.
to borrow the money,
Mm-hmm.
but it includes interest and any fees that may be
Mm-hmm.
associated with that loan.
Okay, that's great. And then I mean, that's something that's going to apply to like almost any loan you're going to get, right?
Absolutely. Yeah, yeah. You always want to look at the interest rate and the APRs.
Okay, gotcha. Okay, and then of course that applies in this situation too. But are people reluctant to get loans sometimes?
Yeah, absolutely. I mean, you're like, oh, it's debt, and can I pay it back? And how does this work? But I always tell students, you want to look at this as an education, like an investment in your education,
Right.
right? Because if you want to be a pilot, that's great. Income potentials are pretty high. So we've had no difficulties when what we see with default rates on these loans,
Mhm.
very extremely low.
Oh
So
wow.
pilots are really good about paying back their loans.
And see, I wouldn't. I thought about asking something like that, but I didn't know if you had certain kind of data like that.
Yeah.
But I mean,
Oh, we do. We monitor that, right? Because we want to make sure that,
Yeah.
we're lending to the right student and to the right schools.
yeah,
So yeah, no, default rates are extremely low for pilot and flight schools.
that's really interesting. I'm sure we'll touch base on that a little bit more later because I'm sure you're still dealing with people who are taking out like loans for 4-year degrees and things
Mhm.
like that, right? And here, I don't want to do anything that sounds negative for any other school or anything like that. But let me ask this the right way: do you see any greater success at paying loans back from people who go to a certain kind of school or trade?
Yeah, it just varies,
It
the
varies.
type of, because there's different kinds of schools. You have 2-year community colleges, you have 4-year publics,
Mm,
4-year privates, in-state, out-of-state,
mhm.
and everyone is different. So,
Mhm.
right,
Yeah.
with Sallie Mae, what we try to do is like if we could, we would lend to everyone, right?
Mhm.
But that's not being responsible. We want to make
Right.
sure that they're going to be successful in paying these back.
Yeah.
So there's different criterias and different things that we look at.
Okay, great, great. And then it sounds like for you guys, we hear you around our school often. I mean, you guys are helping a lot of students get the education they want.
Mhm.
I've like I said, this is our 30th episode now.
Wow.
I've
Congrats.
yeah, thank you. Primarily, our guests have been students and CFIs that were students,
Mm.
which has given me a lot of insight onto how these guys are thinking. These young people and career changers. I mean, there's so many different people who are coming to our school.
Yeah.
What I've found really interesting is that everyone's really interested in what they're doing. Like everyone's really, really passionate, and they're really looking forward to their career. And I don't talk to every college student that way.
Yeah.
When I talk to them, sometimes they're like, "Yeah, I got homework and stuff," and then they get out of school and they're like, "I don't know what to do
Yeah.
now." That's what I hear. Pilots don't talk like that to me.
Yeah.
And so it's made me look at a loan, whatever size, a little differently because I see them all talking about it like an investment, which has made me very interested in asking you about that.
Well, and that's key, right? I mean, you
Yeah.
need to be passionate about what you're doing
Hmm.
because when you go to college, you may have it. Well, like me, I thought I was going to be a lawyer,
Yeah.
and here it totally pivoted to a different direction.
Right.
And I think you want to make sure that you understand what are your passions, what are you really into,
Hmm.
because the borrowing will come easier that way, right? Because you have kind of focus, you have an agenda of what you want to accomplish, and you want to be a pilot. That's great, right? But you also want to look at what are the income potentials that I'm going to
Mhm.
have after I graduate, right? So that you can determine how much should I be borrowing
Mm.
and understand what those costs are going to be so that you're
Yes.
successful in paying those back afterwards.
That makes and I think that might be some of the difference in behavior and what I'm seeing from people at flight school, especially since a lot of people are career
Mhm.
changers. And then it's sort of a fast. Not all flight schools. I don't really know
Mhm.
the whole realm, right? But many of them are a fast track program to get to your career.
Yeah.
And I've been doing my research. Pilots they seem like they're going to do well and be able to pay
Yeah.
back their loans.
Yeah, yeah, no, they're good. Yeah, yeah.
What are some things that usually do to help them? You said it's an investment. Is there like a go-to thought process you try to walk them down to make them feel a little less hesitant?
I think who feels more hesitant sometimes, because sometimes the borrower, the student borrower,
Mhm.
may not have enough credit established or the credit's not so great.
Right.
It's the co-signer that sometimes hesitates. You'd be like,
Mm.
do I want to be tied down to this loan? And what does that mean if the student doesn't pay it back? And do I have a way out?
Yeah.
So those are the things that we kind of talk through to help them understand.
And I saw that in the program, in some of the details that
Yeah,
I got to review for you guys. You make it a lot easier for the cosigner. So I didn't have a cosigner in
yeah,
almost anything I've done so far.
yeah,
But even when I did ask, I was like, I really don't know how to make you feel more comfortable. I felt like they're talking to me, and I sort of need to sell it to them.
yeah,
And I'm wondering, like, what sort of what helps someone do that?
yeah. So what I tell students, if their credit is not great or it's good enough, but they still need a co-signer attached to it, how do I get a co-signer
Hmm.
along with that? I think one good selling point about the loan program is that there's a co-signer release option, right?
Okay.
So it gives some peace of mind to that co-signer to say, you know what, I'll help you while you're in aviation school, but then after you graduate,
Hmm.
see how you get released from this loan is that you have to make 12 on-time payments after
Hmm.
you complete your program. And after that, then the co-signer has the ability to get released. And now it's just the obligation of the student borrower to pay that back. So it gives them some peace of mind and say, you know what, I'll help you. Heck, we'll even make sure that you make those on-time payments afterwards so
Right.
that we may have the ability to get released. And now it's just you.
That's huge. I
Yeah.
mean, to me, that sounds huge. If I could tell someone like, look, it's not actually for everything. There's an easy out for you,
Yeah.
right? Then I mean, it's a lot easier to say, oh yeah, I'll help you out.
Yeah.
You
Exactly.
know,
Yeah.
is a cosigner most of the time needed for the people that you think
No,
you're talking to?
no. I mean, because you probably have a wider range of students from maybe right after high school, older students trying to maybe shifting careers.
Hmm.
So a co-signer is not required.
Right.
The only time a co-signer is going to be required if you don't have enough credit established, right?
Hmm.
Or your credit isn't so great.
Hmm.
So the great thing about the loan program is that when you're done applying for this loan,
Uh-huh.
you're going to know if you've been approved,
Mm.
denied,
Mm.
or if you need a co-signer,
Right.
right? So when you see that you need a co-signer, then you can go out looking for one, right? And I think there's also a misconception about co-signers. Well, it has to be my parent. And maybe I'm an adult. I'm like, God, I don't want to bother my parents, you know?
Yeah.
So it can be really anyone over the age of 18 that has credit established
Hmm.
that can be a co-signer. So of course it could be mom and dad. It can be siblings, a spouse,
Hmm.
grandparents, whoever wants to give the gift of education, they can be a co-signer as long as they have good credit.
That's amazing, and I like that you talked on the application process.
Yeah.
That was always a big deal for me. I mean, especially if I'm looking back to financial aid, right?
Yeah.
I'm like, oh, it's so scary. And then even with some of the credit cards I've opened up over the years, I don't know if I always opened them on purpose.
Yeah.
You know what I mean? I
Yeah.
just was trying to apply, and so I like that you say you'll know exactly what's going on by the end of the application, and
Yeah.
you'll still have options left.
Yeah.
Yeah.
No, the application process, we try to keep it simple, right? Wherever you have internet access, you can do it on your mobile phone, your tablet, your computer, desktop.
Hmm.
It takes about 8 to 10 minutes
Yeah.
to apply. But again, by the time you're done, you're going to know if you've been approved, denied, and need a co-signer.
Yeah.
And the great thing about the application process, we want to make sure like it's full disclosure for that borrower, right? That they know exactly what they're getting themselves into.
Right.
So we break it down for them, like what the interest rate's going to be,
Okay.
what the payments are going to look like, what that total cost of the loan is going to be.
Mhm.
So that way they can make a more educated decision about which option is better for me so that I can
Okay.
go ahead and choose that one.
If I'm curious about getting a loan for
Yeah.
flight school specifically, maybe, and I go online and I find the right application,
Yeah.
uh, you're like, there's really not much risk to applying, right?
No, there isn't, right? So, I mean, it is
I-
going to look at your credit, right?
That's
It's
what
going
I'm
to be a hard inquiry, right?
Okay.
But I should also tell you about rate shopping, right? So,
And that's the scary part. Yeah.
yeah. So, right. Because you're thinking, well, is this my only choice? Is there other options? Because maybe you got one that gave you a really large interest rate, right?
Mhm.
And then you want to see, well, let me go check Sallie Mae out, right? So, if you do that within 45 days
Hmm.
of searching for a private educational loan,
Hmm.
it'll be considered one inquiry and it'll be soft inquiries.
Right.
But you got to do that within 45 days. So it'll
Okay.
be like one hard inquiry and the rest would be soft inquiries.
Okay, I see. And then someone else told me something about that. I didn't understand. I
Yeah.
thought I would lump it all into one, but I see what you're talking about, the soft increase.
Yeah. So that way it doesn't affect your credit then.
Right.
Partially. Yeah.
So you're saying if someone is shopping around for
Yeah.
a loan for higher education, for flight school or not,
Mm-hmm.
probably at the end of the day, do all the applications within 45 days.
Within
so
45 days,
Okay.
yeah. So it's by law that's set up, especially if you're looking for educational loans, whether it be a mortgage, a car loan.
Okay.
It's the same thing with educational loans, right? So you have 45 days to say, Okay, let me look at this lender, let me look at that lender, and then you kind of shop around. But if you do it within 45 days, it's just considered one hard inquiry and the rest would be soft inquiries.
And then besides that, there's no real commitment after applying unless you accept something, right?
That's correct. Yeah. So even if you e-sign, right,
Uh-huh.
and then you're having buyer's remorse, you're like, I don't know if I want to do this, right?
Yeah.
Just cancel it. Yeah.
Okay.
And we'll cancel the loan, zero it out, no interest, no nothing, no obligation whatsoever.
Hmm.
But once it's dispersed to you,
Yes.
now it's your responsibility,
Okay.
right? To pay it back after when it's due.
Okay, and that's what I wanted to know too. When are you crossing that line? I opened a credit card recently, and I wanted to open that credit card, but it was a little too easy.
Yeah.
Actually, I filled out a few things, and then it said, "Here's your credit line." I was like, "Whoa!" I thought I was gonna get a chance to like say yes or no before after my application. I don't know if anyone else experienced that, but I'm
Yeah.
pretty technologically savvy. I was pretty surprised.
Yeah. Yeah. Credit card's a little bit different than a student loan, like a
Right.
private loan. So, yeah, as long as the loan hasn't been dispersed to you, we can
Yeah.
cancel it out, zero it out, no
Absolutely.
interest, just it's done,
Okay.
right? No obligation to the student, no obligation to the school. It's all zero.
It's pretty easy. Okay.
Yeah.
Well, I think some of these will apply too, but I have some questions from our admissions team.
Yeah.
They get some typical questions, and I maybe want to kind of get some of those going because I feel like a lot of our viewers might be the same people who would ask these questions.
Yeah.
We'll see. But one question they get a lot is, how do you get approved for a loan? We already kind of talked a little bit about that, but specifically, are there some really important factors like debt to income ratio or a credit score? Are some of those things going to be like the biggest factor?
Yeah.
Mhm.
So we do like a comprehensive review, right?
Okay.
So we start with FICO,
Mhm.
but FICO doesn't tell us the whole story, right? You may have a low FICO score, but there's other factors that we're looking at, right?
Okay.
So we do what we call like a comprehensive review on
Mhm.
the applicant's credit history
Mhm.
to determine three things,
Yes.
right? Ability, stability,
Mm.
and willingness to pay back. And what do I mean by that?
Okay.
So ability is debt to income ratios that you mentioned. So we look at that. And then we look at stability, we look at residential history, job history, and also an established credit history.
Mhm.
And then with willingness, we measure that by payment history, right?
Mm.
The debts that they have and how good are they about paying those back on time. So those are probably the main factors that we'll look at.
Yes.
And as long as you have all those pretty tight and pretty good, there should be no issues on you getting that loan on your own.
Right.
But if there are some issues there, then maybe a cosigner is going to come into play.
Okay. And if someone's like still they hear that and they say, "Ah, man, I'm not going to be a good fit." What would you say to them?
I would still apply. Yeah.
Okay.
Again, you're going to know if you've been approved, denied, or you need a cosigner, right?
Right.
So
Again, there's
eh,
not much risk.
yeah, there isn't, right? And if you don't want it, then zero it out and be done with it and maybe go with another lender if you feel like you need to go somewhere else.
Mhm.
But no, there's really no risk. I mean, it's going to be, if this is what you want to do,
Yes.
you want to go to flight school, you want to go to
Yes.
aviation school, you need some financing, this is going to be the approach that you're going to take, right? So
Mhm.
again, we talked about rate shopping. You have 45 days to shop around, but there's really no risk if this is exactly what you want to do and you want to make sure you find the right financing for yourself.
Yeah, that makes a lot of sense. And that's why I wanted to ask. It's just like when I was talking to you before this,
Hmm.
I was really pleased to hear about the ease of the application. I just
Yeah.
want people to know that you should probably do that if you're thinking about it at all. Just check it out.
Yeah. And there's different options too, which is really good because
Mhm.
you'll find that private student loans, for the most part, have different repayment options while you're in school
Mhm.
and then after you graduate as well.
And
Right.
that's what my next question was.
Yeah.
I was thinking about asking is, flight school, it's a full time commitment.
Yeah.
Most of the time,
Yeah.
especially someone like thrust flight, right? It's accelerated. It's going to take all your time.
Yep.
We actually don't want our students working while
Mhm.
they're at school because we want to ensure that they're focused.
Yeah.
And we work with you guys to make sure that they're able to do that
Right.
by doing a few things. One is there's like a deferment payment period, right? Could you explain that?
Yeah.
The
So
options and
there's three different repayment options while you're enrolled in your program,
Okay.
right? One is that you can choose to make interest payments while
Okay.
you're enrolled in the program. The other one is a fixed payment of $25.
Mm-hmm.
And then the other one is a deferred option that you're
Okay.
talking about where you don't have to make any payments at all
Okay.
until after you complete the program.
Mhm.
And then after you complete the program, you still have a 6 months grace period
Mhm.
before you go into full principal and interest payment on that loan, right?
Okay.
So they have all those options available for them. And we talked a little bit about the application process.
Yes.
So all of that is shown to them there, right?
Awesome.
Again, full disclosure. So let's say you want to go in and you need, I don't know, let's say $80,000 to $100,000, right?
Right.
So you go in and then we say, okay, you've been approved.
Mhm.
You have both variable rates and fixed rates, right? So you can choose one or the other.
Okay.
And then it's going to break down each repayment option that we talked about, right? The deferred, the interest payment, the fixed payment.
Mm-hmm.
It'll tell them what their payments will be while they're in school.
Okay.
It'll tell them what their payments will look like after they complete their program.
Mm-hmm.
It'll tell them how long it's going to take them to pay that back.
Mm-hmm.
And then when it's all said and done, what is that total cost of that loan?
Including
And I'm more
the
of
interest,
a,
right?
exactly.
Yeah.
So I'm more of a visual person. So if I see, gosh, if I do make payments while I'm in school, it does minimize some of that interest that's occurring on that loan.
Right.
So maybe I can't do the full interest, but at least $25, that's something that I can manage on a monthly
Right.
basis. Then maybe I want to go that route. But they can choose whichever one they feel more comfortable with.
Mm-hmm.
And then from there, once they pick all of that, they just e-sign
Mm-hmm.
and it's done. And then they'll know, again, if they need a cosigner or whatever the case may be.
That's awesome. With our flight school, our admissions team can work out the loan to allow them to pay for living expenses while they're in
Yeah.
flight school. I don't know how much of that is done on your end when you're having
Mhm.
conversations with people,
Mhm.
but are you familiar with that process?
Yeah, absolutely. Yeah. So it's called what we call is the cost of attendance,
Okay.
right? How much does it cost to go to that flight school,
Mhm.
right? And that usually includes tuition and fees and room and board and living expenses, right? So that's what you're talking about. So you can accommodate because some students may be coming from other states, coming to the school, maybe in Texas or any other state that they're going to,
Right.
that they're going to need, apartment, they're going to need meals, transportation, all that kind of jazz, right? So you can, within your cost of attendance, have an amount that they can borrow
Mm-hmm.
to include your living expenses. So that way that's taken care of as well. Because you mentioned too that you don't want them to be working.
Right.
So this is to substitute a little bit of that income.
Mm-hmm.
But I always tell them just because they're giving you this much doesn't mean they have to borrow that much, right?
Exactly.
That's where budgeting really comes in,
Mhm.
right? That you want to make sure, okay, listen, this is an investment, but I also don't want to be over borrowing either. How much do I really need a month
Mhm.
to live off of, right?
Mhm.
Comfortably, right? Listen, it's not going to match the incomes that you had before kind of changing your career to flight,
Right.
but you want to make sure that you have enough just to cover your expenses because,
Mhm.
again, you don't want to over borrow and have to pay so much after you graduate or complete your program.
Gotcha. Okay. And just and I maybe have like two questions on that, but is there anything to tiptoe around when someone is thinking about substituting some of their income they might have had before just to pay for expenses?
Yeah, I mean, just cut corners wherever you can, right?
Okay.
I mean, do we need all the streaming services? I mean, do we need to be going out all the time and eating out, right?
Okay.
Maybe some home cooked meals, anywhere we can cut expenses, you want to try to do that so that, and I tell this because, and I know your population students are a little bit older too, and they know this, right?
Right.
But I always tell students, you want to live like a student now so that you can live like the professional that you want to be after you graduate because
that.
you don't want to be bogged down with so much debt after you graduate, right? So just plan ahead,
Mhm.
kind of budget yourself accordingly so that you don't have to borrow so much money.
When I was younger and I started hearing friends who, I didn't finish going to all of I started doing videography and I ended up building a little bit of a freelance career and things like that and got my own experience. So I didn't even end up finishing school, but I was always really stressed about working while in school, and
Yeah.
which some people might still have to do, but in this situation, it's a lot less of an option.
Yeah.
So it's only been emphasized now what I learned before when my friends were telling me
Mhm.
that they were covering some of their expenses through loans and things
Mhm.
that they were able to get while going through school. And
Yeah.
I mean, that never occurred to me. I didn't even occur to me. So I wanted to make sure that people knew that
Yeah.
that's an option now. Don't live like a king off your loan, right? It
Right.
might not
Yeah.
be
Yeah.
worth that.
Yeah. Yeah. Yeah.
And from your own experience, it's probably not worth that. So
It is not.
Yeah.
No. I mean, especially like your traditional 4-year colleges, right?
yeah,
This is the first time that you're getting a refund check that you never had before. You're like, well, let me soup up my dorm room with a nice, big screen TV, the new PlayStation, all this kind of stuff. But then you run out of money. It's like, oh crap, now what do I do? Right.
Mhm, mhm.
So yeah, it's just a matter of budgeting yourself and not, overextending yourself and over borrowing.
Okay, cool.
Yeah.
Well, I really like that option is there, especially again for our flight school students
Yeah.
who may have been in a workforce or not. Either way, they're
Yeah.
gonna have to find a way to live, and so that's cool. We do have a lot of students who transition from other schools.
Yeah.
So
Uh.
these students, yeah, they'll have questions about like, okay, this is a little confusing. How does my loan here apply to the loan there? How do I do this? And so the question was, word for word, anyways, the way it was given to me. How long does it typically take for an individual to reapply without the old Sallie Mae loan at the other school to show up?
Yeah. That's a
Sounds
good
like a
question.
tricky
It's a little complex,
Yeah.
right? Because there's different situations that occur. So let's say that you're at a different flight school and you want to come to thrust flight because it's just not working out for you at the other school that you're going, right? So if you have a Sallie Mae loan, if that loan hasn't been dispersed or certified by that school, The student can call Sallie Mae
Okay.
to have it transferred to Thrust Flight.
Mm,
Easy peasy.
mm-hmm.
That would be the simplest way.
Okay.
If it's already been dispersed, then you want to go ahead and cancel any other subsequent disbursements that are out there. And then once you've done that, reapply to the school that you're going to be going to. If that's Thrust, then you apply for the Sallie Mae loan. Once you've been approved and admitted to Thrust, then they can go ahead and apply for the loan.
And then it sounds like, and if I ask this question, you'll probably, it sounds like it's difficult once it's been dispersed to transfer the loan anywhere, right?
Yeah, that's right.
Because if I'm understanding correctly, and just to be, I want to use different words for different people who may be listening, right?
Yeah.
So once you start receiving money, it's not even probably directly from Sallie Mae, right? Is it going to the school and then being dispersed? I know our school does it that way.
Yeah, and that's usually works, right? Because if you give it to the student, you just don't know if you're going to get paid, right? Your tuition fee. So
Absolutely.
we put some onus on the school so that they can administer the program, right?
Okay.
So typically how this happens is a student applies, they're approved, and then we send notice to the school to say, hey, this loan has been approved and ready for you to certify. And what does that mean? They're certifying that they're enrolled in your program,
Okay.
and that we know the time frame that they need the loan for, and when their expected graduation date is going to be, right? Those are the information that we need.
Yeah.
And then from there, once we receive the certification from the school, then we send the money directly to the school. And then what happens is you take out whatever fees that they owe you, and then whatever remains, you cut them a check for living expenses.
Right. And that is how my admissions team explained it to me. And I liked hearing it from you because you talked about what's needed before the next step kind of thing. Just real quick to address the audience. This is the part where if I were listening to this and trying to do some research for myself going to flight school, I would be taking notes right now. Just because it's a little, it's detailed. But if you're the type of person who's even watching this for research, well then go ahead and take the notes. Because you're probably looking for these details, and these are the details that I think are going to be important. So, hey, here's the process when you're applying to a school. Here's how you get those expenses covered, and a lot of that information is going to be covered again in the application process.
Correct.
So, and with the admissions team that you're working with whatever school you're going to. Nathan's great if you've talked to him.
Nathan Ross. Shout out to Nathan.
Shout out to Nathan. Nathan will walk you through it, and I love that about Nathan. He's like, hey, don't worry about anything. I'll ask you for what I need, and you won't have to do the rest. So, anyways, we'll continue. I just want to make sure people know, hey, I want to get nitty gritty here, and I hope that you're here for that. That's really what I'm getting at. So, I'm going to start just kind of reading these questions as I have.
Go for it.
So, can you give us one or two things that slows an applicant's process down? Like what delays a student from getting approved or denied?
For delays, I got to tell you that 95% of our loans, I mean, again, you're going to know if you've been approved, denied, or you need a cosigner, right? But there's a student who the delays occurs when they transpose numbers, either a driver's license number, a social security number, and then now we need proof of your identity to make sure that everything's all good. But it's simple, easy peasy, about 8 to 10 minutes, you'll know. But it's it's human error, really. That delays the process more.
Okay, it's really like a typo often, or not knowing your information correctly.
And if your credit's not good, that can be another step, right? Because then you need a cosigner, right? So if you know that your credit, I always tell students ahead of time to check your credit history. And actually, this goes for everybody too. On an annual basis, check your credit, right? Because you don't want to be a victim of identity theft. And especially if you're going to make a big investment going back to school, and the cost may be a little bit higher for aviation programs, you want to make sure that you have the credit established to be able to get approved for these loans so that there's no surprises, right? And that you haven't been a victim of identity theft.
Right.
But by doing that, that helps you and gives you some peace of mind to know, okay, my credit looks good, everything's been paid on time, my FICO score looks really good, I should have no issues. And if that is the case, that may most likely be the case when you get approved. But if you know that your credit isn't great, then trying already to secure a co-signer so that it doesn't delay that process further.
Gotcha. And if you feel like you're getting ahead of yourself, right, with the co-signer still, again, like there's a lot of information that you can provide that lets the co-signer feel at ease with how it all works.
Exactly.
So, I don't want to, I want to try to stay away from diving too hard into credit information because I know that's like a whole thing, and that we're not a financial podcast, right? And I don't want to give any financial advice necessarily, but it sounds like it's safe to say if you don't understand credit, it's good to start working on your understanding as early as possible, really.
Absolutely.
Yeah, and understanding, meaning knowing how payments work and how they affect your credit, how loan sizes and different types of credit lines
Yeah.
affect your credit line. It's good to understand those things so that when you pull up Credit Karma, FICO,
Yep.
Experian, whatever you use to look at.
Annualcreditreport.com. It's free
Okay,
every
great.
year. If you do it every 12 months,
Uh-huh.
it is free.
Oh, you can
Right.
get a full credit
You
report
can
for
get a
free.
full credit report free
Okay.
from the either TransUnion, Experian, all the credit bureau agencies.
Okay.
But on an annual basis,
Hmm.
you can do that every 12 months
Hmm.
and monitor just to make sure
Hmm.
that your credit is good, that there are no discrepancies or any errors.
Hmm.
So that way there are no issues when you need to borrow a loan, that you'll be able to get that loan successfully.
Okay, great. And then again, that's perfect. I didn't even know. I've learned about the
Yeah.
full report and how much information it really gives.
Yeah.
What I would say, and again, I'm not a financial, but
Yeah.
I want to say that what I did was I did download pretty much any credit app I can find, put them
Uh-huh.
all in one folder on my phone and put it on my home screen.
Nice.
And I would check them as frequently as I can, not because I understood them, but so that I could understand them.
Yeah.
And it helped me break some of that down. And now I feel a lot more on top of my credit.
Yeah.
So, yeah.
In FICO, so that's important, right? So it starts from 850 all the way down to the right. You want to be at the top, right? I think on average, I want to say it's about 657, no, 700 is
Mhm.
the average nationwide, roughly. Don't quote me on that, but it's
Right.
about there, right?
Okay.
But the better the FICO, of course, the better your FICO score it is. But what FICO does is looking at payment history, it's looking at the type of credit you've opened. So there's different
Mm,
factors, right? One of the things that really affect your FICO score is you not paying your payments on time.
I've noticed that. I've
Yeah.
learned that the hard way.
And if you're opening so much credit,
Hmm.
why? Did
Yeah.
you need all that credit?
Hmm.
I mean, be very strategic about how you're opening credit when you need credit.
Hmm.
And then you want to make sure that you have a history, right?
Hmm.
Where you've opened kind of a diversified portfolio, as I say, with different
Yeah.
types of credit, whether it be an apartment that you're paying monthly, a credit card, a student loan, a car loan,
Hmm.
those kind of things. And that you're paying those on time, because when you don't pay that on time, it becomes a history.
Hmm.
And that's when your FICO score goes lower, and it shows in your credit report as well.
The point is, though, come to understand your credit enough to ease your
Yeah,
mind when you go to
that'll
the
give you some
application
peace of
process.
mind, because
Yeah.
okay, I've checked my credit, everything looks good on my credit report, my FICO score is
Hmm.
pretty good,
Hmm.
so maybe I shouldn't have any issues.
Hmm.
And if they feel like, well, why did I get denied? They can call Sallie Mae and say, hey, I thought I had pretty good stuff, right?
Hmm.
And then they're going to be sent a letter showing them where the issues might be, and if they can correct those, they can reapply again
Okay, great.
and see if they can get approved.
Okay, gotcha. Well, I see the next question here, and I think we may have already answered it. I'll
Yeah,
read it just in case you want to add anything to it. But how many hard pulls? And they're using different verbiage here. So, how many hard pulls can a student get? Is it every time they apply, or a certain time period? I think they're asking about the
rate
credit
shopping
inquiry.
and thing, right? Yeah,
Yeah, credit
well,
shopping.
yeah.
Yeah,
So we kind of talked about this, right?
yeah,
So it's one hard inquiry when you apply for a private loan,
right.
and then you have 45 days, as we talked about,
Hmm.
to shop around,
Right.
right? And those would be soft inquiries.
Okay.
But no, but again, once you apply with Sallie Mae, and we talked about this,
Yeah.
you're going to know what your status is going to be.
Hmm.
So there shouldn't be, why would you need another one
Hmm.
in a month? Like, and this is where you also need to plan, right? And talk to Nathan at
Yes.
Thrive or your admissions folks to say, how much am I going to need for this year, right? To borrow.
Right.
And then that way you know exactly how much you're asking for, so that you don't have to keep coming back every time and say, oh, now I need $20,000 more. Now I
Mhm.
need, so if they tell you it's 100,000, you're like, oh gosh, I don't know if I can take out 100,000. That seems like a lot of money. But then if you haven't budgeted yourself and exactly that's what you need, what is tuition and what is cost of living, then you know exactly how much you need to borrow.
Okay, gotcha. I just want to take a brief moment to pause so I can talk to the audience and let them know that we're going to go ahead and cut this episode probably into two pieces here. We want to keep going, and I don't want to cut it short. I want to get as much information in as possible. That's why we'll cut it here and make this the first episode of our financial conversation about students who want to start their flight training to become an airline pilot. So we'll see you guys next week for the rest of the conversation, where we'll do a little bit more of a deep dive on some of the information we have yet to cover. Otherwise, of course, like, comment, and subscribe. That's helpful to us. If you're on our streaming platforms, our ratings really help us out and help more people hear the information that we have to give.